Well, 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 looks like the trade war is back on in full force. It's very odd considering that just 12 hours ago, old Larry Kudlow was out in full force saying, hey, we had very productive trade talks today. Things are going great. The Chinese, they're swell folks. They really love making deals, and, nobody loves deals better than the Trump administration and the Chinese. So, odds are, they're going to have to come to one because nobody there doesn't want a deal, and he can't, he did the normal pump, trying to say how great everything was, and guess what? Big shocker, that turned out to be completely untrue. The Global Times today, which is a Chinese newspaper, of course closely aligned with the government, they came out and said, China's about to retaliate against these big tariffs that Mr. Trump is going to impose, and they're going to impose their own tariffs. And guess what? They're going to be big, and they're going to hit America hard. They want Americans to feel the pain of the trade war. That's what they said. And so there goes our trade talk optimism for Friday. No more risk-free Friday today. The trade war is now hotter than it's ever been. And in fact, it's quite ironic because of the time difference, apparently, I was reading in Zero Hedge. The Chinese tariffs that they just announced to retaliate against Trump's upcoming tariffs, those tariffs are actually going to hit before Trump's tariffs. Now, this is pretty bad timing considering that the Fed has been pretty disappointing in the last couple weeks with Powell's mid-cycle adjustment comments. If you don't recall, Powell essentially said that, we're not starting a cutting cycle. We're not going to be cutting back to zero, and this is not a regular thing, cutting interest rates by 0.25% at every meeting. We're not going to be doing that because this is just a mid-cycle adjustment. We're nowhere near the end of the business cycle. There's not a recession coming, so we don't see any need to cut rates. Now, of course, the markets don't want to hear that. The markets want rate cuts because the markets know that we're very close to a recession, that the only thing that can keep stocks going higher is interest rate cuts. There's no real natural growth going on. Now, the reason why there wasn't a big sell-off after Powell made these comments and essentially said that the rate cuts will not continue until, unless Powell is convinced that we are going into a recession, which, of course, since Powell said that, that's what the markets would try to do. The markets would sell off and try and prove to Powell that, hey, a recession is imminent and you need to cut more. And then, of course, because Powell is like Plato, he would have done whatever they wanted him to. But in order to keep the markets from selling off, the president decided to intervene and say, guess what? We've got this great trade talk optimism. Aren't you guys optimistic about the trade deal? And he looked at his staff, and Kudlow said, of course, we're very optimistic. The Chinese, things are going so great. The negotiations have gotten so much better in the last week since Powell made those comments that the stock market was not happy about. And things are going great. And so we've had this great relief rally over the past few sessions, and things have been going pretty well. We've stabilized above 2,900 on the S&P, so things are looking pretty cheery for the bulls. Even though we've broken we did break a wedge, a technical wedge, and I'm not a technician, but the technical guys were very worried about that we needed to have a pretty substantial rally in order for there not to be signs of a sell-off coming up. But with all this trade talk optimism, there really was a great potential that the S&P could have recovered above that technical level and had gone into another big rally. But the Chinese have decided to pour cold water on that. I think that they understand that the U.S. economy right now is weak, as is the Chinese economy. But they want to put some pressure on the U.S., and they want the U.S. Folks to feel the pain. They want Americans to understand that their government is making their quality of life worse. Alas, there is a potential salvation for the stock market today. Risk-free Friday is not necessarily completely lost. We could still recover, even though stocks are in the red today, which is not supposed to happen on a Friday, because today is risk-free Friday. Stocks are not allowed to go down on a Friday. The Fed is having a big meeting, a big shindig at Jackson Hole, which I believe is in Kansas, around Kansas City. I believe it's hosted by the Kansas City Fed. And it's at this big retreat that they go to every year, and all the Fed guys party together and do lines of cocaine off of hookers' bellies. And then the whole event culminates on Friday with a big speech by the chairman of the Fed talking about how great of a job the Fed is doing and how happy he is and what they plan on doing in the future. And so the markets are watching this very closely, hoping that Powell is going to say, hey, we're going to cut by 100 basis points just like Trump wants. Which, going into today, nobody really expected Powell to say that, although it would have been nice. People expected Powell to reiterate the mid-cycle adjustment narrative and to say that, hey, we might cut in the future, we might not. It's not really a big deal. It could go either way. Right now, things are looking pretty great. And, you know, they expected Powell to be pretty optimistic for the economy, which is not right now what the markets want. The markets want Powell to be pessimistic, so then, but not too pessimistic, but pessimistic enough to guarantee a rate cut in the future. So now people are making some pretty great memes about Powell having now to rewrite his entire speech because, of course, even though the Fed doesn't say this, they really do target the stock market, and all their speeches are written for the market to hear. They're trying to manipulate the stock market in how they talk, and they're very careful about what they say. So going into this, Powell might have said one thing because he thought that the markets should hear a certain message, and now that there's a trade war going on, Powell's going to have to rewrite his speech to reflect that, and so that he sends the correct signals to the market. For it is not earnings nor economic data that is the chief price discovery mechanism for the stock market. It is, of course, Federal Reserve sentiment. So with the trade war back in full force, the only hope today is that Powell comes out and is supremely dovish, which of course in Fed speak, dovish means folks who want to cut rates. Now Powell has been he's tried to keep himself in the middle and not be too hawkish or too dovish, but I don't think that he's strong enough. If he had a particularly hawkish speech, or let's just say a more neutral speech plan today, whatever it was, his final speech that he's going to end up giving in light of this trade war news is going to be on the dovish spectrum. It's going to be more dovish than he otherwise would have given. Speaking of doves, James Bullard, who I believe is the president of the St. Louis Fed, he has been one of the guys jockeying to be the new dove appointed by Trump to take over for Powell when Trump eventually gets mad and fires Powell. And he has said, we don't have a bubble, which is great. That makes me feel very reassured. He says there's no bubble in the financial markets. It's nothing like the bubble we had in the housing market. Now, of course, famously, no one at the Fed saw the housing bubble coming, and Fed chairman at the time, Ben Bernanke, even said after the housing bubble popped, he had the audacity to say that subprime is contained, meaning that the subprime mortgages that are rolling over now and that are turning bad, and the people who are going bankrupt, yeah, that's all an isolated incident. There's no contagion that will spread to the rest of the economy. Which, of course, was utter nonsense, and that's why we had a financial crisis. The truth is, of course, financial assets are a bubble right now. The only question is, when will that bubble pop, or when will it top? I think that it's quite possible that we've already topped out. And as far as what pops it or when it will pop it, it could be anything. This is just a psychological game at this point. The reason why bubbles happen is because things become, people's perceptions of what the value of an asset is. It gets a little too out of control, and then eventually it comes back down to earth. And this happens quite suddenly as key facts change, which could be anything. And so now we wait for Super Powell to swoop in and save the day. I am not entirely sure, though, that he has the gumption that it takes to truly reinvigorate this market. Perhaps he could come out and make a Draghi-style whatever-it-takes speech, but we'll just have to wait and see. So, and on that note, if you gained anything of value out of this video, I'd appreciate it if you like and share this video. Sharing is really the only way that my content gets around. I have a very slim portion of my views come from recommendations or anything like that. So your sharing the video is really the only way that it's going to get out anywhere. And of course, if you haven't already, please do subscribe. Now, I hope you have a wonderful day, and I'll see you folks back here tomorrow.